Until and unless you've been living under a rock, you must have come across the word Hindenburg in the last few days. Yes, the same word that has taken the stock markets into a frenzy, or shall we say, taken Adani into a frenzy. Well, all because of a 90-page report by a New York-based research firm. The Adani Group has lost close to $42 billion in a span of 2 days. The costliest search document ever? And it is self-explanatory that the report did not have very nice things to say about Adani and their group of companies. So today, we make an attempt to simplify the Hindenburg-Adani fiasco for you and also explain how you will be impacted. So make sure you watch the video till the very end. But before we know what the report said and on what basis, let us find out where it all came from. Hindenburg Research, based out of New York, is an investment research firm that has a track record of finding corporate wrongdoings and bringing them out in the public domain. Founded in 2017 by Nathan Anderson, the company is surprisingly only a team of 5 members. It is named after the infamous disaster of the Hindenburg airship in 1937, where 35 people lost their lives due to sheer negligence. The group considers it as the epitome of a total man-made, avoidable disaster. And hence, the name embodies the company as one that looks for similar man-made disasters floating around in the market and sheds light on them before it's too late. But apart from their noble cause, they might need at least some amount of money to keep the research going, won't they? So for that, they have some 10 odd investors who provide capital and fund its operations. After months and years of research, the findings are made available to these investors first before releasing it online. The investors then short the stocks of those companies till the time the report is made public, and thereby making huge profits out of the subsequent bear run of these stocks. Hindenburg and the team take a cut out of this profit as well. Just to give you a hint of the magnitude of the effect of this report, the company released a report of similar nature in September 2020 on Nikola Corporation, an electric vehicle manufacturer. They accused it of exaggerating its technology and partnerships. The result was that the share price plummeted by 40%. The CEO promptly resigned and investigations began to be carried out by the SEC. So now that we know that the Hindenburg report is not something to be taken lightly, let's delve into the Adani report and what allegations it makes. To give you some context, the report claims to highlight one of the most egregious examples of corporate fraud in history. Some of the major allegations of the report are stock manipulation and accounting fraud scheme. Adani Group is the second largest conglomerate in India, run by its chairman and founder Gautam Adani, who has previously even touched the position of the second richest person in the world. The 7 key listed entities of the group, namely Adani Enterprises, Adani Transmission, Adani Total Gas, Adani Green Energy, Adani Power, Adani Ports, and Adani Wilmar, have a collective market value of INR 17.8 trillion. What's perplexing is that almost 83% of this wealth has been generated in the last 3 years. Even out of Mr. Adani's fortune of $120 billion, almost $100 billion came in the last 3 years. The answer, of course, lies in the inflated stock prices. It's the same as owning the same percentage, but the base gets larger and larger. Now, you will very well say that this is a genuine phenomenon. And how is the Adani Group at fault if there's great demand for their shares? This is where the Hindenburg allegations come in. They allege stock parking. And what exactly is that? Let's find out. Indian securities regulator, SEBI, rules that publicly listed companies should have a float of at least 25% public shareholding. That is, the proportion that is not owned by promoters. This helps in ensuring a minimum level of liquidity and also reduces the chances of insider trading and stock manipulation. The shareholding pattern in Adani companies raises an eyebrow because of this very rule. 4 out of 7 listed Adani companies are on the brink of the delisting threshold due to high reported promoter ownership, with 3 of them being in the 74 to 75% bracket. However, in the publicly held portion lies a group of suspicious funds based out of Mauritius. Moreover, these key public investors of Adani are secretive and exhibit behavior inconsistent with normal investment funds. These funds don't even have websites, contact information, or any basic information. So, Hindenburg argues that these funds should be classified as promoter entities. And when that happens, the 75% limit of promoter shareholding will be way surpassed. But the story doesn't end here. Hindenburg alleges that it is through these apparent shell companies that Vinod Adani, the elder brother of Gautam Adani, engaged in dubious transactions with stocks to artificially inflate prices. To put it simply, shell companies bought shares, but the de facto ownership remains unchanged because, well, the companies are shared. This creates demands for those shares, and we all know what happens when supply remains constant and the demand goes up. The prices go up too. And this may explain the sudden surge in Adani's wealth in the last 3 years. The second serious allegation is that several of Gautam Adani's associates have repeatedly faced allegations of corruption, money laundering, and theft of taxpayers' money, totaling an estimated $17 billion. Beginning with his younger brother, Rajesh Adani, who has been arrested twice in 1999 and 2010, both times for evasion of customs tax. However, instead of being terminated from his position, he was rather awarded a promotion. Next is Gautam Adani's brother-in-law, Sameer Vora, who was convicted of a diamond trading scam by the Department of Revenue Intelligence. He is currently the executive director at Adani Australia. And as we saw before, Vinod Adani has been accused of operating a vast empire of shell companies that funnel assets through Adani Group of companies. The third allegation is about the dubious corporate structure that is entailed in Adani Group of companies. For instance, Adani's 7 key listed entities collectively have 578 subsidiaries. There have also been a series of exits in the past, especially CFOs. They've had 5 CFOs in the past 8 years. But despite the scale of the Adani Group, they're audited by Shah Dandaria, a firm with only 4 partners and 11 employees. Hindenburg believes that these are enough to raise questions about the integrity of the organization. With these serious allegations in place, it is pertinent to question the credibility of such a report as well. However, there's minimal data in the report that comes from their end. The majority of it is nothing but scrutiny of facts, be it over-leverage in Adani companies or the track record of the Adani family. Everything was out in the public domain. All that Hindenburg did was analyze facts, connect the dots, and present the world a 32,000-word document that cost Mr. Adani a fortune. And it has already started showing its effects. One of the 7 key listed entities, Adani Enterprises, was bound for a 20,000 crore follow on public offer, making it India's biggest issue to date. But it was just 3 days before that the Hindenburg report was released and dampened the excitement of the market. As a result, the FPO was subscribed to just 1% on day 1 and 2% on day 2, the day when we're recording this video. With no ray of hope in retail investors, Adani has moved a step ahead to QIBs, Qualified Institutional Buyers. One of Abu Dhabi's most valuable listed firms, IHC, has agreed to invest $400 million in the FPO. Because after all, Mr. Adani isn't ready to succumb yet. As we mentioned earlier, because of this menace, the Adani Group has taken a loss of Rs 4 lakh crores. But sadly, it isn't just the Adani Group that's bearing the brunt of the Hindenburg report. All thanks to the domino effect. Indian banks, for instance, have been falling simply because they have lent money to the Adani Group. If Adani fails tomorrow, then banks have a massive problem of bad loans lying in front of them. Now, one might argue that Adani hasn't borrowed from Indian banks at all, but rather from international investors or bonds. The answer lies in the interdependency of financial institutions to each other. The banks too lend to each other. If one fails in any part of the world, then others can be massively impacted too. And the more serious concern lies in the collateral that the Adani Group pledged for these loans. They apparently pledged their own shares in order to get this debt. Now, it's a fact that equity share pledges are an inherently unstable source of lending collateral because if share prices drop, lenders will require a forced liquidation of shares. Excessive selling in an already weak stock creates a downward spiral for everyone, the banks and the Adani Group. Now that we have covered the Hindenburg report in such depth, it is only fair to hear the other side of the story too. In response to the Hindenburg report, Adanis have released a 400-page PDF with all the answers. Too many PDFs, huh? The video will go on for hours if we explain everything point by point to you. So we'll just try to cover the main points. Firstly, they of course question the credibility of the Hindenburg as an organization and address them as merely a short seller. Regarding the 88 questions posed by Hindenburg, the response said that 68 refer to matters that have already been duly disclosed by Adani Group companies in their respective annual reports, memorandums, financial statements, and stock exchange disclosures from time to time. 16 out of the remaining 20 are pertaining to public shareholders and their source of funds, while the balance 4 are simply baseless allegations. As far as questions related to Vinod Adani were concerned, the Adani Group responded that he does not hold any managerial position in any Adani listed entities and has no role in their day-to-day affairs. So that doesn't technically make him a related party. They also listed down the various initiatives taken by the Adani Group such as female entrepreneurship, ESG activities and other CSR activities. And last but not the least, Adani used the trump card of nationalism and called this, and we quote, "Not merely an unwarranted attack on any company, but a calculated attack on India, the independence, the integrity and quality of Indian institutions, and the growth story and ambition of India." At this point, it's hard to point out who is correct and who isn't. Hindenburg has released another document questioning this rebuttal by Adani. So while this catfight may go on for a long time, at the end of the day, we are only concerned with how it is going to even impact the common man. Even if you don't hold any Adani shares, do you have anything to be worried about? Adani and their group of companies are a crucial part of the stock exchange, and their failing inherently means bad news for the entire index. So the stock markets in totality could go into a slump, given the massive nature of Adani. Secondly, as mentioned above, Indian banks are also at exposure in this scenario. In the short run, their share prices will fall, as is already happening, but in the near future, if the Hindenburg allegations do come out to be true, banks could face a bad loan crisis and eventually face a liquidity crunch. Hopefully, the situation does not worsen to this stage. And lastly, markets have already turned volatile. A new fact comes up every day and investors react accordingly. So this volatility might induce foreign investors to withdraw their money from Indian markets and park it in a more stable, safer condition. But relax, we didn't mean to get you so tensed. When nothing is going right, then the elders will have to step in. And so will RBI in this case. They can't let a company as huge as Adani simply fail, can they? And that too in the worst case scenario, which is pretty far right now. This was simply our attempt to summarize the Adani Hindenburg fiasco for you. We obviously couldn't have included each and every detail, so sorry if we missed a few facts. But we at Upsurge tried our best to give you an unbiased view of the facts and a clear picture of both parties to this case. If you learned something new today, do hit the like button and also share the video with a friend. Make sure you subscribe to Upsurge.club and help us push the algorithm in our favor.